Hey everyone, welcome to another episode of On the Flip Side. On the first Monday of every month, we talk about mindset. And every Monday after that, it is all about real estate. My name is Diana Lizarazo, and today's guest speaker is Ryan Carson. Now, before we get started, I want to share some exciting news with you. I have a real estate investing platform. It's a social networking platform for real estate investors, mentors, and professionals. Professionals are anyone that is supporting real estate investors. And so if that's something you're interested, you want to check it out, you want to see the public calendar, for example, where you can see all the events that are going on, this is the platform for you. Now, let's get back to the show. Today, we will be talking about answering all your questions, actually. So if you got any questions about real estate planning, we will be answering those questions, or I should say Ryan will be. So if you guys are ready, let's send Ryan some thumbs up, some hearts, some fire, and let's get him on the stage. Let's see. I made a noise. Usually that means it's working. Oh, I think you're on.
Yeah.
Hey, Ryan.
Yeah. Hey, how are you?
I'm good. I'm good. How are you?
I'm good. I'm good. Good. Thanks for having me on, and it's nice to be in your IG space here with all your members. Thank you.
Yeah, thank you. Let's get started first. Let's let the viewers know what kind of lawyer are you? What are you expert in?
Yeah. I do a lot of work with real estate investors, not only just on like the real estate acquisition part of work for them. So whether it's purchases, sales, refinances, loans, but we also do a lot of planning with them. And actually, since the increase in a lot of the interest rates, we've seen a lot more investors um, really kind of take up this idea and this concept of maybe holding on some of the volume of transactions that they may have been doing before, and they're gearing back and doing a lot more planning. So making sure corporate structure is in place. If they have it in place, is it as efficient as it can be? Have we had it properly reviewed with lawyers and tax planners? And then, what further things can we do? Not only in that planning process of structure, but how do we make the structure work for future goals and legacy planning and so forth. So it's been pretty interesting in the last couple of years that we've seen this sort of shift in focus, which makes a lot of sense. Before, in the height of the market, 2020, 2021, that kind of thing, it was a lot about acquisition. And acquisitions are always the fun part about being a real estate investor, but it's pretty important, I think, to do the planning. And with the correct planning, you can actually do even better as a real estate investor,
Mhm.
um, with the same or less volume of deals. So.
100%. I love that. And you're right. I think when things are go, go, go times, you're trying to take advantage of that time and just buy as much as you can.
Mhm.
But now that we actually have time to relax and actually now organize ourselves better
Yeah.
and just get ready for the next coming, because I'm sure in a few years, whatever it's going to be, we will see the next up happen. So we can definitely take this time either as new investors, find like even just starting in the organization and planning and
Yeah.
preparing, or as already existing investors, just now seeing what we have and organizing ourselves to settle ourselves, and also for that, like you said, in the future when the next up comes, we're just that much more prepared and that ready for it. So that being said, what kind of questions should we be asking ourselves and preparing ourselves to even talk with someone like you, to prepare ourselves to, and answer that, or answer some questions that you would have to be able to, for you to give us better information to structure our corporations and things like that.
Yeah, absolutely. I mean, some great questions to kind of like ask yourself would be, do I have any corporations I'm using? Probably almost everybody who's listening will answer yes. I've got some element of corporate structure, whether it's only a few corporations or one corporation, that's sort of, the vehicle in which you're doing your real estate investing through, or you might have quite like you might be quite an established investor and you've got quite a few corporations kind of spread out all over the place, right?
Mm-hmm.
And so the question just really is, if you don't have a corporation, you should probably really consider having corporations. It's not necessarily for every single person, but I would say the majority would benefit from a corporation, right? Or a
Mm-hmm.
corporate structure. And then the question really then becomes, once you've got that, or if you already have it in place, has it been properly reviewed by a lawyer and an accountant who are doing this type of planning? Because we have to recognize not all accountants, not all lawyers do this kind of planning, right? And so you want to make sure you're working with lawyers and accountants that are used to this, are experienced in this, and who are doing it themselves. And that's the best part with myself. Not only am I a lawyer who is familiar with this kind of planning and working with these types of accountants and other business strategists, but I've done it myself, right? So
Mm-hmm.
I'm not going to be talking to people about something that I don't actually already do myself, right? And have in place myself. Now, what I have isn't always going to be the same thing everybody else would do. Everybody's going to have something pretty unique because everybody's situations, everybody's goals, everybody's concerns and challenges are unique to them and their situation, right? So there's going to be sort of if you will, a template or sort of a precedent plan that we can kind of bring to the table to kind of start with. But as we start to learn more about the individuals, their goals, their challenges, their objectives, sorry, then we start to customize what that would look like because it's going to be some new, some existing, and then we just basically get all the pieces put together so that they've got a new up-to-date plan.
Mm-hmm. I love that. And for example, because there are, like you said, so many different use cases, so many different types of people and like family and just
Mm-hmm.
different ideas of how they want to structure things. Like, can you go through some of the quick examples of what kind of or what you've seen of different decisions that will make some like
Yeah,
make a change actually happen?
yeah. So sometimes people can be motivated by like the example of having trapped capital. Like we all are going to be stuck with the same problems of a lot of people got into real estate investing in the first place because it was to be a new source of income generation, right? Whether like a primary, secondary, or tertiary like stream of income. It's probably 90% of people are doing real estate investing for the purpose of in some way making some money, right? And so one way to maximize that goal is to have a proper structure and a proper plan in place. And some people might be sitting out there on the call today who they have money, but they're like it's trapped, right? Like they can't take it out of the corpse, or if they do take it out of the corpse, they're going to get hit with taxes and so forth, right? So it's sitting kind of trapped in corporations, maybe one, maybe multiple corps, right? So that is like a great example or a great avatar client for this type of planning because we can review the corporate structure, figure out where the capital is trapped, and then figure out ways how to get it out and deploy it in a way that's going to create layers of benefit for the real estate investor to accomplish the goals, right? So it's always coming back to what are the goals? What are people trying to
Mm-hmm.
accomplish, right? What are people trying to achieve?
Mm-hmm.
But trap capital is something that we're definitely talking to a lot of business owners, and in this particular case, real estate investors are business owners. So, we're talking to a lot of people about how can we help you free up trap capital in your corps.
Mm-hmm.
So
And when
that,
you say freeing up, does that also take into consideration, let's say, or are you or is this something different? Talking about when you have to do your taxes and you're having to pay more, or is that a
it,
different, would that be considered something different?
yeah. So basically, this is referring to you've got a corporation. let's say it's done, some real estate deals where it's made money, whether it was a sale or a refinance or a combination of the above, but the money's like sitting in the corp. You haven't like taken it out, personally. Otherwise, you're going to be paying a lot of money in personal taxes, right? And so at least
Mhm.
if you keep it in the corp, as long as you've got like active rates and so forth, you're getting like the preferred corporate rate, which is, a much lower percentage, right?
Mhm.
Um, and so what we're talking about is in that particular situation, how can we get that money working for you in such a way that it's going to provide you like multiple layers of benefit? Like what if we told you we could get it so that you invest it in a insurance tax shelter that we arrange as part of this, planning, and you basically have like planning now for legacy and death benefit. You have cash reserves and investments growing, and you have specialized lending opportunities to get 90 to 100% loan to value on your trapped money, like because it's now an asset. um, what if we told you that that asset allows for capital dividend payments as well in the future that are tax
Mhm.
free? So just in like one simple thing, and I know I just threw like a whole lot at everybody, but hopefully it caught people's attention to be like, whoa, wait a sec, I wanna know about that. I'm gonna reach out to you, right?
100%. And guys, just rewatch this again and take notes of all those things.
Yeah, I mean, the bottom line is, like I said, this one idea, this one plan, if you will. And again, I appreciate it, and I'll say it several times. No one plan will be the same for anybody, right? Though there might be aspects that are very similar, but everything's got to be specialized and tweaked for the person. As we talked about, their goals, their challenges, etc. But if you have capital that's kind of stuck and it's not really working for you as much as it could be or it should be, or you don't want to have it, like what are your options? Like, so what, you invested in the market, like you open some corporate TFSAs or RSPs or whatever you do under the corporation name. Those are all subject to the volatility of a market, which, as we've seen, is pretty up and down, right? Like one year it could be up 10, 15, 20%, but then 2 years, in a row after that, it's down 15 each year. So like you're stuck in this turbulence of the open market, which is why, again, why did people turn to real estate? People turned to real estate because prior to interest rates increasing, real estate was about as guaranteed a return in investment as you possibly could get, right? And so now the question is, how do we still keep working in this real estate plan and do it in such a way that is accomplishing more with less risk, less exposure, right? And all the while, in this example of trap capital, making your capital work better for you, right?
Mhm.
So I mean, another example just off that same thing. If you've got some money that can be planned for and redeployed in a certain way. Like one problem that a lot of real estate investors are always looking to solve is, where do I get money for the next deal? Right? Like, where do I get my down payment money from? Or like, how am I going to raise the capital? Well, one aspect of this planning that's extremely beneficial is you can get what is called specialized lending from banks. Specialized lending is what like wealthy people use to like buy yachts, and umbrella lending on like massive acquisitions, stuff like this, right? And so the benefit with specialized lending is you've got people who really know what they're doing, and they can lend on these types of assets, these tax and insurance umbrellas, these plans, right? And you get, because insurance is so boring but so conservatively um, powerful, the benefit is they'll lend you 90 to 100% loan to value, which they
Mhm.
won't even lend you 90 to 100% on your real estate assets, right? But they will on this, right? So now, again, we've got money. This planning is allowing us to get money working for us better, right? And we also have it so that now this money is potentially um, in a plan that's going to allow us to solve another problem, which is capital raise or having capital to do more things with, right? So um, the planning is pretty powerful that way. I mean, another question that we will get people asking us about, or we ask people about in their planning, is like, do you have any wills, right? Like you've got 10 real estate properties, but you've answered on our get to know you um, documentation, you don't have any wills or you don't have any corporate wills, right? Like if you have corporations, you should, in addition to a personal will, have a corporate will, right? So it's like this is an aspect of planning that we're also working on with many of our clients too, just making sure um, not only are we catching up on business planning for their real estate, ventures, investing, but also making sure they're up to date and current and making sure they've got stuff in place for their estates.
Mhm. That's very interesting. And what about, so when considering these things that you've been telling us, how, because these sound a lot specifically for more like intermediary to advanced investors.
Mm-hmm.
What would you say for a beginner investor? What would be good for them to start looking into, or when should they come to even talk to you to start talking about that, or not start talking? Because I feel like you can always start talking about it. It's always good to be informed, but as in maybe know when to start making those steps that they should do after, like, yeah, start preparing themselves.
I mean, I would say to be honest with you, it's never too early or too late. I'll give you an example. You could have like a brand new real estate investor client, just really, first time listening to your IG group live and reading your reading up on your past ones that you've done. They're just doing just done their first acquisition. Um, it's never too early to start because you can always start kind of figuring out, okay, what are your plans, right? Like I know you just started, so let's make a benchmark that in a 12-month period, because you want to have 10 doors or 10 properties closed under your belt. Like, well, we got to start with one and then get to 10. And if the benchmark, because of us having some conversations, is at that point we're going to start triggering some additional work to get done because it's going to make sense for you. You've already got that laid out in the very beginning. So I think that the sooner the better, really, because once you kind of talk to a lawyer and accountant that kind of get this, then the whole idea is you want to put a roadmap in front of the clients, right? To be like,
Mm-hmm.
hey, your 12-month goal is A, right? Your 36-month goal is B, your 60-month goal is C, and then your 10-year goal and onward is D, right? Like we want to make it so that the plan's there and it's kind of laid out in front of you, and it's like you don't have to do it all in one shot. Like what kind of planning ever does that, right? Like you've got to have benchmarks. So it's like, let's work on a 12-month, a 36, a 60, and so forth, right? And I think if you do that, the plan will probably change from time to time because life is always changing. But the benefit is you've got something set and kind of up and ready to go, and it's easier to kind of have that all laid out in front as opposed to trying to go backwards, right? Sometimes going backwards, not only is it more work, but it could be more money, right? It could cost more to go backwards and play catch up, right? If you're an intermediary or like advanced investor and you're doing this all at the you know later in the process, right?
Hmm. Yeah,
um
I just wanted to give Barb a little shout out. She's asking a question.
sure.
Do you have any in-house accountants?
Yeah, I I work with two people pretty consistently in this kind of planning. They're not in house. Like as a lawyer, we're not allowed to be like multidisciplinary. Like I can only have lawyers in my law firm, but I have two really good industry partners that help me do this kind of planning. So the good news is um, we do a lot of the consultations really at no cost, because if the clients end up going forward with something, the the products that we would put in place as part of the planning, like they basically cover and pay for everybody's cost. So the good news is it doesn't end up being too much out of your pocket with some of this planning,
Mm-hmm.
right?
Mm-hmm.
Um, some of the tax and corporate planning could still end up having some costs affiliated to it, but utilizing some of the tax and insurance planning, usually the insurance planning that we put in place, like the policies are covered by the insurance companies.
Mm-hmm.
So it's really great planning. It gives a lot of benefits and layers, um, and you'd be surprised how much of it can kind of get taken care of or covered cost wise for you, um, by by like a third party. You know,
Mm-hmm.
like you're
Mm-hmm. And
yeah. So
it's also a great point that you're making, because I think also when you're even just, for example, hearing the word real estate planning and you don't really know much about it, it's nice to have that, like you said, that initial free consult to kind of give that guidance and kind of like you said, lay out those products. Because then either if you're at the beginning or like just looking into things or already in the middle of it, you can make informed decisions and not be thinking about, because I feel like a lot of people sometimes will push things off just because they're like, oh, how much money is this going to really
yeah,
cost me? And at least these kind of things can be answered from the beginning, because sometimes a lot of us don't realize that, that you don't like that is maybe not as expensive as you think it will be. And and then you are kicking yourself because you didn't do it sooner. And then so it's better have this information, be better prepared or understand what your basic or initial plans are, and then if anything say no about it. But at least now you have all this information that can help you out to be better informed and make decisions.
yeah, and well, and I think going back to something I mentioned earlier, to your question of like, so when should somebody start? Like, should it be like, really only when they're kind of like at a certain number of properties, or cash or capital or both? Like intermediary and advanced like investors. Um, and I kind of said no. I mean, I think you can kind of start right away, because a good plan will have like layers, like it'll be benchmarked, right? So, you know, we map it out. Maybe all we do is just basically say, hey, yeah, your corporation, it doesn't have a minute book and everything, and you got like three partners, so we need to do a shareholder agreement, and you don't have a corporate will. So that's all we're going to do as the beginning part of your plan, right? But then, we say, but based on like your forecast of your goals and what you're projecting to try to do with real estate, we're going to have a reminder to check in with you in 12 months, because if you've accomplished what you are saying you want to accomplish, the the plan should go to step two, benchmark two, which might be you do have some capital. It's kind of trapped, like I said, or it's stuck, or it's not working for you as well as it could and should be. So let's put it to work and let's get it to accomplish more things for you. I mean, that's really what it's all about, right? Like that's what this planning, and that's the philosophy I take behind it all. I want to help people accomplish more things, right?
100%. And then even for the investor, I think especially if you're in a phase of just getting started or again in the middle of it, that clarity really helps you to just move forward even faster too, because now you have this path and you start moving quicker. And sometimes, like you said, maybe you don't hit that milestone, but you realize your milestones have changed. And at least having this guidance helps to just help you move forward and hit your milestones, or hit a couple and decide, you know what, either I'm growing bigger and going in different directions, and now start planning instead for those types of things instead.
Yeah, and I mean, maybe a specific segue to like you mentioned, what would be some of these like flags or red flags for us to be like you need a plan, right? Or you need to talk to us about this planning. Um, and I sort of mentioned like trap capital situations, or not having like a corporate will or a will at all, um, or you're feeling as though you're constantly kind of struggling to sort of find like that capital, and you'd like to see if there's a way to have capital kind of come to you easier, or have some readily available capital kind of just available to you. We've kind of talked about those kinds of scenarios.
Mm-hmm.
One particular client that I would say potentially could really benefit from this, because they're likely sitting on capital. um, it just depends, I guess, where that capital is. Like if it's in a self-directed account, like an RSP or a TFSA or LIRAs, those sorts of things. But our private lenders, because private lenders, they have money, and they're using that money to, lend it out. They get a mortgage, so forth and so forth. They get their return, right? But as people on this call are probably familiar, and as they might have experienced if they're a private lender, or if they've done private lending, one of the problems right now with private lending is the fluctuation in valuations, right? And whether or not you're sitting in a first, second, third, or so forth security position, right? And so private lenders, I think, not all, but some of them are experiencing a bit of like uneasiness as far as deployment of money into these different types of opportunities, because they're unsure of, well, what if the borrower defaults now? Am I going to get, how long is it going to take me to get my asset back and get that capital back, right? Or heaven forbid, like, if you were keen on doing like unregistered, lending, you know, have you found yourself in any sort of, predicament there where you're having a difficult time getting your capital back? Hopefully, if anybody's on the call and that's kind of happened for them, they do have their capital back. And if you do, then this planning could create sort of like open a new door of like how to use that money in a way that's much more conservative, and potentially allows you multiple layers of benefit, as opposed to just a return, right? Like just making that interest, that 8, 10, 15, whatever percent interest that you are happy to get. What if you took something more conservative at like a 7, 8% marker, but built layers of benefit that now allowed you to go do some other things on top of have
Mm-hmm.
additional layers. So
Mm-hmm.
at a
Yeah.
relatively low risk,
Yeah.
very low risk.
That's a very, very good point, because there were a lot of times, and like you said, there are now, where, for example, a lot of people, let's say, are doing first mortgages, but second mortgages, third mortgages, now people are just not thinking to do them. And if you're, especially in Ontario, where the price of houses are like more pricier, a second more, you can only do a second because you can't do a first because it's just so much more expensive. So having these other avenues to be able to invest in, like you said, something less riskier, and still being able to at least make some money.
Yeah.
Maybe not obviously as much, but usually in our world, you want to make sure your money is safe, like you said.
Yeah,
And so there
absolutely.
will be years where the amounts may not be as much that we want, but we have more security of that it's going to be coming back, not disappearing.
That's right. Yeah, I mean, it's really tough right now, like in some real estate areas, right? Like
Mhm.
there's definitely been some groups and some types of investments that have been hit really hard
Yeah.
in the last 24 months, and it's cost some
Mhm.
people some money, right? And or will cost some people some more money. So yeah, I think it's one of those things that lots of people, most people turn to real estate investing as an opportunity to get their money to work more for them. And it seemed like a great return at a relatively low risk. And that was true, right? That was definitely true. I think it's still true. It's just, depending on what you got yourself into, the risk might have went up a bit, right? Um, and so that's obviously, had people kind of rethink some things or potentially pause. And I think that pause is a fantastic time, like we're talking today, to
Exactly.
relook at the plan like holistically, and really, it sounds kind of corny to say it, but really talk to people about like what are your goals? Like really, like what are you wanting this to do? Right? Like what are you wanting, just like any of your investments, what are you wanting this real estate investment portfolio to do for you?
Hmm.
What problems are you wanting it to solve? What challenges do you foresee with that? Um, I mean, another great example, this would probably be for people that are more intermediate to advanced, because real estate investors are business owners. Whether you think about yourself like that or not, you are. You're a business owner, right? You're owning the business of investing in real estate. And so the question is, you know, as you go on in that business journey, just like somebody who owns a widget factory and they're like, hey, I've done 25 years of making widgets. My business is very successful. It can run without me. I want to sell it to somebody else who wants to buy widgets, like a widget making factory, right? And so the whole thing is, at the end of the day, you might get to a point where you can figure out how to transition or sell your real estate portfolio, some or all of it, right? And so this is where that planning, having a plan, is going to be important. The other part that's probably again for the intermediate to advanced are like people who have quite a little bit more built up. You're you're gonna want to ask yourself this question of, what do I want to have happen if I die? Like,
Hmm.
death and taxes are happening to all of us, unfortunately, right?
Hmm.
So, what can we do to make sure that we have a plan in place to make sure that our real estate portfolio that we spent like years and years, maybe decades building, because one of your goals was to make it so it goes to the next generation, like to your kids and then to their kids and so forth. What do we need to do to make sure that happens, right? And the portfolio stays intact. So you have to do planning to make sure that A, you figured out how to get the taxes paid for without liquidating and or leveraging properties, and B, you have to find a way to make it kind of move on and flow through to the next generations. And so that's where some of this planning that we've talked about can definitely come into play to solve that, using some corporate structure. People on the call might be familiar with terms like estate freezes, that sort of thing. So you do some planning with the accountants and so forth to help with that. And then you can also start having in your corporate structure a family trust, which in many ways can help the flow through of assets to next generations of family.
Hmm.
So there's a lot of planning with that too, right? So
Yeah.
the plan
And they're
really
all
touches
great.
everybody.
Hmm. Yes, and they're all like that great questions that we need to ask ourselves, or like that get into planning to even just become aware of what is out there so that we can make the best plans for ourselves. Because like you said, the plans for an individual can be so different to a small family, to even a bigger family, or even extended family. Like you said, like people can have such different goals out there, and just making sure that you just at least have that communication is so important to just give yourself, at least putting you in the right direction to make better decisions. And because when we don't know what we don't know, those are a little bit more deadlier things. So it's like might as well go and know as much as you can and then decide what you doesn't apply to you. Or again, in that planning where you're having that conversation that you're identifying what really makes sense and what
That's
doesn't.
right. Yeah. And like we want to be problem solvers for you, right? Um, and like so for example, we had a client come to us who's a bit older, like he's in his late 60s and he's a like a professional landlord. So he owns several properties and he lives off the, cash flowing of those rents and everything like that. But to the example I just gave about like estate planning and legacy planning for himself and his children, like he basically figured, well, the state's going to have to sell most or all of those properties, pay off, capital dividend or capital gains that are due and so forth. And there'll be some cash left over, and that'll be the legacy. But what if we said we could do a plan that makes it so you don't have to do that? We freeze the value for you, and the plan takes care of the capital dividends and creates a legacy, and your real estate's untouched. Whether your kids want
Mhm.
to be professional landlords as their job or not, they could still benefit from that real estate portfolio.
Hmm. I love that. That's a great point.
Yeah,
And
thank you.
it's just basically again always that planning or just that learning phase is so important to just understanding what is out there. And even because sometimes I feel that there's a lot of investors that don't even have that clear goal, which helps the plan. We're just starting those conversations and answering those questions that you've asked, or even in the form that you have really starts helping individuals put things together and actually start thinking about things that they've just never thought of and
Mhm.
prepare themselves to be able to make the best plans for themselves and just make that like that clarity just helps you really move a lot faster, I believe, to get whatever you want when you're setting everything up and just having those goals in place and that plan in place.
Yeah, no, you're
Benny,
100% correct. 100%.
do you have any final comments that you would like to share with the viewers before we go off?
Um, I mean, just thank you for for having me on with your group today. Hopefully, I was able to provide at least one or a couple points of intrigue and thought provocation for the group. If people have any questions or need any help, again, just reach out to us. We're here to help like them. We want them to do well. We want to help solve their problems and find ways for them to reach their goals quicker.
Mm,
Um, and I would probably just say it's really important. Like a plan is the most important thing you can do. It's not
that-
the most exciting thing you're going to do as a real estate investor, but it will be the most important thing you can do.
Mhm. Yes, that plan just brings you that much closer to success. Without a plan, how do you get anywhere? It doesn't
Right.
help you.
That's
Ryan,
right.
thank you so much. It's so awesome always to chat with you. You always providing great value. If you guys love what you heard from Ryan, he's going to be tagged on here so you'll be able to follow him, see what he's up to. You'll also be able to DM him and like that, get some more information, understand more about real estate planning. And if you guys love what you heard from me, if you love my shows, then definitely follow me because you can stay up to what I'm up to and always be on track of what shows are coming on. Thank you, Ryan. Thank you, everyone. It was great
Thank,
chatting with you.
thank you, Diana.
Bye, everyone.
Bye bye.